Good morning, everybody. Happy Friday. End of the week. Here we go. Getting into the end of the month, too. We're closer to the end than the beginning. Good stuff. Welcome to the Education Room. It's nice to have you guys here. My name is Mark Novak. I am going to be walking you through indicators today. We're going to talk a lot about rules, building a plan, putting yourself in the best position for success. Guys, as I get rolling into the day here, I'm going to put some things in the room for you. I'm going to put an example of how to write a plan. I'm going to put a high probability trend trade checklist for you in there. And I'm going to put another one in there with pictures of the actual trades. Good morning, Shane. Guys, if you haven't downloaded these, put them on your computer, looked at them, studied them, used them. Vegan witches. That's funny. I totally forgot what I was saying now, Gary. Thank you. Guys, there's the three documents that I just put in the room for you. We're going to use them all today. There is an example of how to write a trading plan, and we're going to cover this start to finish. There is a high probability trend trade checklist. If you're brand new with me, if you're looking for consistency, get in the habit of putting this list on every trade that you take. And then there's also a high probability trend trade checklist that has pictures of what the rules mean as you go through. So anything and everything that I talk about in this room, I'm trying to give you tools to use to keep you consistent. But before we get going, I always come to forexfactory.com, taking a look at the news, making sure there's nothing going on that might make things a little silly. Guys, today, Friday, December 16th, 9:45 a.m., we have flash services, PMI. This is high impact news, which means that it has the potential to move the market erratically, to make it behave unfavorably, to make it difficult for you to take or maintain a position. Understanding where that news is gives you an opportunity to stay away from it. Let those deep pockets do what they're doing. Dab chain, this is your 8 to 9 end of your day. No, I totally get that. Thanks for fighting storm damage. Elvis, the checklist with pictures is about 4 inches above your post. I just posted it in the room. Dab chain, stay safe out there. Storm damage. Having grown up in Houston, I'm familiar with how hard you guys work when things fall down. So thanks for that. Elvis, I put it right above you. Literally, it is at the 9 a.m. timestamp. First thing that I put into the room. If you go up, there's 3 of them for you. I like it because when you're brand new, guys, this is everything from the manual that I talk about. It's just pictures showing you what it looks like when we talk about a termination condition, when we talk about 3 divergences, when we talk about an area for entry. It's just a visual for you to take that checklist and compare against. So guys, every morning, make sure that you're checking news. Crude oil rolled. If you have not rolled your crude oil yet, you're going to want to do that this morning. There's still some volume on the 123 contract, but it certainly isn't anything like it is on the 223 contract. That 223 is probably going to flow a lot easier. Excuse me. When we talk about rolling, guys, John Novak has put all of the new contract on the NinjaTrader 7 installer. You can run that, update it, or from the education page, when we talk about that NinjaTrader how-to, there's the software user guide. And adding symbols, rolling contracts is there for you right now. Good morning, John Novak. His ears must have been burning. Rolling contracts is a very easy process, guys. It's a matter of opening up your control center, tools, instrument manager, and you just want to get that most current contract over to this left section. So if I type in CL and search, it gives me the description here. You'll notice that the expiration is the one that we should be on. Click that left arrow and it's going to put it in the list for you. And it really is that simple. And then if you already have your charts up, the easiest way to do it, I think, is to take this L up top and make every chart on your workspace the same color. This is linking the charts, which means that when you come to this drop-down menu and you go to that 223 contract, not only will it change your 13.2, but it'll change your other charts as well. Just keeps you from having to do it 10 times. That is right there in the software user guide. If you need help with that, raise your hand. Jason and Tech can help you. But just for grins, try doing it yourself once. Get in there, see if you can do it with the instructions. The instructions are pretty thorough. Also in the NinjaTrader user guide here, screen capture programs, how to share in class. A lot of you are using Capture. Some of you are using Snagit. Guys, I want to show you something. We're going to do this Friday morning. Every time you take a picture, and I'm going to use Capture so that everybody can follow along because the process is the same. I'm going to click that great big capture button. And if I hover over one of my charts, it's going to take a picture of one of my charts. So I need to come up to the upper left-hand corner and hold down that left mouse button. Click and drag all the way down. And when I release, up comes this camera icon. And from this camera icon, I get my image preview. And guys, this is half the way for what I want to see from you guys. The next thing I want you to do is I want you to use arrows to point out anything that you think is important. And I want you to take shapes if you have a question about an area. But the most important thing that you can do is I want you to use this call out button. And I want you to tell me why you got in. I want to see your rules. If you tell me why you got into a trade, we can discuss how you're following rules. If you tell me why you got out of a trade, if you tell me where you got in, if your entry was right, if your entry didn't follow rules, the more information you give me on the chart. How about this? I was anxious, scared, nervous. Over here, you can put I jumped in. I moved my stop too soon. All these things that you're feeling, that you're seeing, that are happening during the trade, if you give me this information, what we can do is we can have a conversation about what we see. You may say, hey, Mark, I got into a long trade right here because I had strong triggers. And then we can talk about how you were giving away advantages. Then just upload it to Screencast. And that's going to put it into the cloud. If I copy that link from Screencast, I can paste it in the room. And that's half of the process, getting it in the room so that we can have a conversation. And then the next thing to do is to make sure that that picture gets into your spreadsheet. If you just took a trade, it goes on the first page. You can paste that link into your spreadsheet, and if you hit the insert button and then the link button, and guys, all of this is in the user guide. I can paste that Screencast address there, and then I can annotate my chart, what's going on in there. Fought rules, lost trade. And then I can come back and I can study it. And this repetition, it's the conversation that we have and your ability to come back and study that's going to get you where you want to be. And then the other cool thing about that is every time you post a picture up to that cloud, up to Screencast, it's going to show up in your Screencast account. And you'll start a collection of pictures that you can go back and study over and over. So I wanted to get into that one a little bit more today because I'm getting a lot of pictures in class where people are asking me, hey Mark, is this a trade? Hey Mark, should I have done this? Hey Mark, is this the right entry? Well, tell me what your rules are. Tell me what you see, what you think. We'll get as much information as we can out of you, and then I'll give as much information as I can to you to help you grow from that trade. Also in the user guide, opening, closing Ninja Trader, scaling charts, stops and targets, chart templates, adding or changing synthetic triggers. A lot of times you guys want to change stuff. I still haven't figured out why, but there's a link to do it. Deleting old charts and templates. This is your weekend homework. If you've never done this, I want you to start fresh for Monday. I want you to delete your charts, your templates, your workspaces, and I want you to start fresh on Monday. This is a great drill so that you can become comfortable with the process, giving yourself a fresh start. And then everything that I talk about comes from the tutorial section, guys. The T3 Fibs ProTrader indicator tutorials. Building a foundation, and that's all we're going to do. We are going to build a foundation, and we're going to start that foundation, guys. It's going to come your first hour of class. Your first hour of class is going to focus entirely on a high probability trend trade. I'm going to talk about the rules. We're going to talk about what those rules look like. This high probability trend trade that we're going to talk about, every indicator on every chart is going to agree with the rules for this trade. This is when everything is its strongest. There's nothing in the way. You take the best of the best entry. When we talk about the high probability trade and we talk about your first 30 days, staying focused on that high probability trend trade, it's going to give you the rules for a trade that has been proven to win and typically wins 70 to 80% of the time when executed properly. And that high probability trend trade is going to give you that memory of success. And that memory of success is going to build confidence. And as you focus on that best of the best trade, it's going to teach you to read your charts. And that's the most important skill that a trader can have, I think, is the ability to read their charts, to look at their indicators, and you're going to be able to understand three key concepts. You will understand where the market is likely to continue, and you'll be able to use that as an entry point for a high probability trend trade. You're going to understand where the market is likely to go. It's going to help you pick out your profit targets. And then you're going to understand where the market is likely to stop. And we call these termination conditions. And these are areas that may reverse the market. And areas likely to stop not only tell you when it's no longer safe to take that trend trade, but those likely to stop, those termination conditions, are going to set you up for success in your first 30 days, because focusing only on the 5-1 trend trades, that high probability trend trade after the termination condition on the 13-2, gives you the best chance for early success. So we're going to focus on the simple. We're going to keep it focused on that high probability trend trade. We are going to stick to the 3 rules. We're going to try not to deviate too far outside of them, guys. Give yourself the best of the best. And those 3 rules are going to happen on 2 charts. When you open up your workspace on the left-hand side, you're going to see a 13-2 chart. And a 13-2 chart is going to be like a broad stroke of a brush. That 13-2 chart is going to tell you an awful lot about what's going on in the market. You are going to understand the overall trend of the market based on the 13-2. If the 13-2 is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Keeping yourself in the direction of the trend is going to help you in the beginning. If the background on your 13-2 is green, you're in an uptrend. You're only looking for high probability trend trades long, looking for the rules to be met. So focusing on the trend and then determining the momentum, which is going to be rule number 1 for a high probability trend trade. And then making sure that there's none of those areas likely to stop the market, none of those termination conditions. Rule number 2 for a high probability trend trade. 2 of your 3 rules are going to be met on one chart, that broad stroke of a brush, that larger, slower chart. And you're going to use the most current bar. It's a 1-bar event. When the rules are met, you're going to look for entry on the 5-1, the smaller, faster chart. You're going to refine your area for entry. You're going to be able to pick the best of the best spot where the market is likely to continue. And by doing so, it's going to allow you to reduce risk and maximize profit potential. So 3 rules on 2 charts, and I've simplified the rules. Andrea, I've got your answer in just 1 second here. I've simplified the rules for you. Rule number 1, remember, gauges momentum. Rule number 1 says that you have to have strong triggers. Rule number 2 on the 13-2 chart says don't trade into areas likely to stop the market. No termination conditions. And then rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Rule number 3 is the wordiest of them all, right? We are going to use a limit order, meaning we're going to let the market come back to us. We're going to buy or sell a pullback, a small retracement in price, and that pullback is going to happen at an area, fibs, midbands, and 1-to-1s inside of favorable large triggers. Dreo, here's your answer. Are you ready? What's a favorable large trigger? There's 2 looks you're going to see when things set up. Your large and your synthetic trending one on top of the other, creating a small window for entry. This is a favorable large triggers, trending one on top of the other. Sometimes those trigger lines are going to split. Guys, one of the phenomenons that happens in the market using these indicators is that price loves to close the gap back to large triggers. It keeps us safe on the 13-2. It helps us identify entries on the 5-1. So Dreo, when you take this picture, on the left-hand side, that's your favorable large triggers. That's the best of the best. When they're split like this, price may pull to the large or price may pull to the synthetic. And if you go back and look at your picture, you'll notice that they pulled right back to the bottom of the synthetic. So favorable large triggers trending one on top of the other, strong in the direction of the trend. Not your best look is when those trigger lines are split. So 3 rules are going to provide you 3 very distinct advantages. And I want you to think about this. Every time you take a trade, what are the advantages that you have? If you have strong triggers, if rule number 1 is met, you have the advantage of momentum. If there's no termination conditions present, you have the advantage of a clear path. And if you use a limit order to buy or sell a pullback at an area inside of favorable large triggers, you have the advantage of an entry where the market is likely to continue. So think of your rules as the advantages provided, and when you break your rules, understand what advantage you're giving away. So 3 rules, 2 charts. Rule number 1 says that we have to have strong triggers. On the 13-2, when the trend is up, when that background is green, strong triggers looks like small trigger lines up and above the large trigger lines. Large trigger lines are widening, they're angled in the direction of the trend, and it's this space created between the 2 that lets me know that the odds are favorable for the market to continue up. In that downtrend, the smalls are below the large are widening, they're angled in the direction of the trend. It's that space created between the small and the large that lets me know that the odds are favorable for the market to continue down. So when you think about rules and the advantages given, rule number 1 being true gives you odds favorable momentum, and you're going to hear me say that a lot in the room. Your job for the first 30 days, your job until you're consistently winning and making money, even on simulator, is to commit to this odds favorable momentum, because when those small trigger lines work their way back inside, anything can happen up or down. This is what we call a weakening of the large triggers. So as you look for your opportunities throughout the day, you're going to look from that point when the small triggers break above the large, that space is created, right up until they return. When they return and break inside, you have given away the advantage of momentum. You'll also see it in a downtrend. They break away, accelerate, create space. The advantage is present right up until they work their way back inside. That advantage is given away. You'll notice on both of those charts, there's these tails or these wicks on your 13.2 bars. Remember that it's a 1-bar event on the 13.2. We're looking for that odds favorable momentum. If these wicks happen, these are potential short trades. This is the refinement process on the 5-1, and when we talk about the entries, I'm going to show you how to put it together. But for right now, know that when you see odds favorable momentum, as you study your charts, as you backtest, and you see these tails, get in the habit of circling them, understanding that you have that advantage, rule number 1. And then rule number 2 says don't trade in determination conditions. It says let that area break before continuing to trade in the direction of the trend with strong triggers. Rule number 2 gives you an advantage of a clear path, of not trading into an area that may reverse the market. And that's all a termination condition is. It's a Fibonacci-based indicator that may reverse the market. And that's based on a comparison of the area and your T3 trigger lines. Those areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can be a cyan divergence low line or a magenta divergence high line. It could also be a large chart mid-band if the large triggers are a full bar away. All of these are 13.2 conditions that may reverse the market. So on your larger chart, there's a 2-step process to determining whether or not you're at a termination condition. And it's pretty simple. Price reaches an area, meaning that those price bars come down and make contact with the area, get a tick within, because remember, they are areas. These fibs are amazing, but 1 tick difference, good enough. And then you're just going to ask yourself, where are the triggers? So price, let's do a little vandalism on this picture. Price reaches an area of support. Price bars come down, we've reached support. Your job is to ask, where are the trigger lines? If the trigger lines remain above this area of support, this is an area likely to stop the market. This is rule number 2 not met. We no longer have the advantage of a clear path. You see the same thing up here. Price reaches support. Both small and large triggers have not gotten through the area. No more short trades. Areas break. It's just a part of it. If they didn't, the market would look like Pong. It would be bouncing in between 2 lines. An area is broken when both the small and the large make it through the area. Small triggers break support. Large triggers break support. Support begins to act as resistance. We consider this area broken. As you give yourself the advantages of the high probability trend trade, this is your best look, and rule number 2 says let the area break with strong trigger lines before looking to trade in the direction of the trend. There's one more look that I'm going to talk to you about, because this look will be your first medium probability trade. Remember, 30 days on the high probability trade, but what's going to happen is your ability to read charts is going to take you into the realm of a medium probability trade. And this will be the first one that you take as a new trader. A medium probability trade is defined when most of your indicators line up for a trade. However, a small issue exists. Your ability to read charts is going to help you identify that small issue. And this will be the majority of your trades eventually, guys. You're going to get to a point to where most of your trades are medium probability trades. And when executing them, you're going to take these trades and manage them assertively. Your ability to read your indicators, to read your charts, will help you manage them assertively. If there's trouble in your way, your chart reading is going to allow you to identify it. You may take a portion of your profits off at that trouble spot and reduce risk to a zero loss level. So your first medium probability trade is going to be when the area has not broken, but has the potential to, based on strong triggers and the smalls already through. And guys, this is what we call a 50-50 trade, and it's not because of your chances for winning. It's because 50% of your trigger lines have gone through, 50% have not. This area of support right here has the potential to break. In order to look for a high probability trend trade, entry conditions must be perfect. And we'll talk about what the perfect entry looks like. But this is going to be your first medium probability trade. So I'm going to take this picture, I'm going to put it in the room, put it into your spreadsheet, call it medium probability trade. Areas have with the potential to break. So price reaches an area. Where are my trigger lines? Price reaches an area. Trigger lines remain below. Resistance is likely to stop the market. No more long trades. Rule number 2 isn't met. Price retraces all the way to support. Good morning, Ed. All of your trigger lines remain above the area. Support is likely to stop the market. Rule number 2 is not met. Notice that as price accelerates away from those large trigger lines, the trigger lines don't follow. There's a full bar's distance back. Guys, when you have this full bar's distance, if a mid-band is reached and the trigger lines don't follow, that mid-band acts as a termination condition with or without Fibonacci support or resistance. That distance back to the large triggers acts as a vacuum. And typically, any short trades taken within that vacuum rarely work out. When price comes up, reaches resistance a second time, that magenta divergence line, another resistance, we have what's called a pivot stop out of a divergence high. And that simply means that price reaches a magenta divergence line, exceeds it, and then trades below. The triggers don't follow. This is a very powerful termination condition. It adds power to the top. And when you have a termination condition that creates a full reversal, gives you odds favorable momentum, we call that a strong top. Right now, Alyssa, we're looking at this on the 13.2. We're looking for termination conditions on the 13.2. Because remember, it's the general temperature of the market. It's that absolutely rules 1 and 2, always on the 13.2. Here, let me give you a cheat sheet. Pop that one in your spreadsheet. We're going to look for those 13.2 termination conditions because the 13.2 is our overall temperature of the market. It's that broad stroke of a brush. If I've reached an area likely to stop the market on the 13.2, it doesn't matter what the 5.1 says because the 5.1 is my entry chart. Termination conditions that create a full reversal on the 13.2 that provide odds favorable momentum. This is what we call a strong top. Termination conditions from a low. Price reaches 1-to-1s, trigger lines don't break. Creates a full reversal, gives me odds favorable momentum. Guys, this is what we call a strong bottom. Trend trades, high probability trend trades that originate from a strong top or bottom from a termination condition on the 13.2 are your best chance for early success. Here we have odds favorable momentum, and here we have no termination conditions. There's one of those tails. This may be a high probability trend trade. Actually, your large are still below. This may be one of those medium probability trend trades. It still may be a great trade, but it's not the highest chance of success best for best. Still a trade new users are looking for. This is the one as your best chance of success. Because this termination condition creates that odds favorable momentum after the reversal, strong bottom. This is simply a pivot. This pivot reverses the market. This pivot provides odds favorable momentum, still a good trade. How do we know this pivot's going to happen? That's where we get to, Alyssa, the one termination condition that I'll look for on the 5-1. And that's 3 divergences in the same price range. It may terminate the trend. Remember that the 5-1 is a smaller, faster chart. And because it is, I can see the change that's happening a little bit faster than with a 13-2. So those 3 divergences on the 5-1 may indicate that a market is likely to reverse. Those 3 divergences, those 3 losses of momentum become even more powerful when the third divergence has the small triggers inside of the large triggers. So over a price range, so Alyssa, I want you to think of the same idea, and let me scroll up. When an area has the potential to break, when your trigger lines get to the other side, we consider the area broken, right? It's a good basic rule of thumb. If I go to these divergences, well, when my trigger lines, if they get below these 3 divergences, just like a termination condition, when the trigger lines get to the other side, I consider that termination condition broken. Does that make sense? Typically on the 5-1, when you have these 3 divergences, they're going to be close to one another. And when they are close to one another, it creates some power, potential termination. When the small trigger lines go from odds favorable to anything can happen, it adds fuel to that fire. And then when that third divergence is higher than the previous pivot from a low or lower than the previous pivot from a high, it's that head and shoulders pattern. It gets even stronger. So you're going to see this look, Alyssa, probably in a pretty consolidated area when something like this is happening on the 13-2. Or up here, even with odds favorable momentum, if your 5-1 is showing you those 3 divergences, this is likely to happen. Guys, being able to read these divergences, recognizing these changes on your smaller, faster chart, not only is this going to keep you from taking trades with a low probability, but what this is going to do is this is going to allow you to manage those medium probability trades as well. Because if I get in on a medium probability trade, this divergence low lets me identify my first trouble spot. Maybe I take a portion of profits there. This third divergence lets me know that things may be changing, gives me the ability to assertively manage out of a trade rather than hoping the position continues in the direction. So guys, termination conditions are designed to keep you safe, to give you the advantage of a clear path. I can tell you from personal experience that one of the most broken rules for new users is rule number 2, those termination conditions, because we get so excited about wanting to be in the market that we're willing to give up that advantage, and it rarely works out for you. So give me a why in the room if you're with me. I'd like to make sure everybody's up to speed. Rule number 1 is strong trigger lines, and rule number 1 gives you the advantage of odds favorable momentum. When rule number 1 is met, and only when rule number 1 is met, we go to rule number 2. Don't trade into an area likely to stop the market. That gives us the advantage of a clear path. And guys, I want to remind you on this because this is a pretty big deal. We're focusing on the high probability trend trades. We're giving ourselves 30 days to learn to read these indicators better, to become comfortable with what we're seeing, because we want to learn to read our charts. The odds of you only chasing high probability trend trades 40 days into it are really slim to none. Your ability to read your indicators is going to open 1,000 doors for you. So give it 30 days to build that solid foundation and spend your first 30 days learning how to pinpoint that area for entry for the high probability. And that's exactly what we're doing. When rules 1 and 2 are met on that 13-2, This is what your 5-1 chart's going to look like. Remember, rules 1 and 2 on the 13-2 are going to happen on one bar. It's an overall temperature of the market. Your 5-1, what happens in that one bar may happen in 20 or 30. Rule number 3 says that we are going to buy or sell a pullback. We're going to use a limit order to buy or sell a pullback, meaning we're going to wait for the market to come back to us. That pullback is going to happen, and we're going to take a trade at an area inside of favorable large triggers. We showed that picture for favorable large triggers, right? Trending one on top of the other, strong. Guys, when everything's met, this is your look on the 5-1. You're looking at strong triggers, huge amount of up bars, and you're just identifying the trigger lines and the areas near them. Areas can be fibs, midbands, 1-to-1s. Our rules say that we're going to buy a pullback because we're in an uptrend. A pullback is a small retracement in price that's counter to the underlying trend, meaning if everything is going up with odds favorable momentum, if there's nothing in the way, guys, we are going to wait for the market to come down. We're going to let those sellers fight just a little bit, give us an advantage. That pullback starts with a reversal bar. This is where we are going to pick out the window of opportunity. When this reversal bar prints, it signals the beginning of the pullback. We're going to create a window of opportunity that goes from our highest point of support, here it is the midband, to our lowest point of support, these 1-to-1s. And those areas will be inside of those favorable large triggers. Reversal bar prints, window of opportunity is established. I'm going to right click and I'm going to activate a limit order. And one of two things is going to happen. Either the market's going to come down to that window, I'm filled, I'm long at 79.21, or it's just going to go without me. I don't control that. I don't control the market. But what I do know is that when I'm filled at 79.21, I have the advantage of odds favorable momentum. I have the advantage of a clear path. And I have the advantage of having taken a trade from an area where the market is likely to continue. These advantages put together and executed properly give me a trade setup that 70 to 80% of the time, this is my result, profit target reached. We said that waiting for the pullback at an area inside of favorable large triggers is going to allow us to minimize risk, and it's going to allow us to maximize profit potential. As we come into this trade, as the market pulls back, my initial stop is going to go below that window of opportunity, where the market shouldn't go, because if it goes all the way below that window, it's no longer my trade. My advantages are gone. Once that market moves in the direction of my trade, I can minimize that risk to below that pivot. I've minimized risk by waiting for the pullback. And I've maximized my profit potential because I'm typically entering the market at one of the lowest points of continuation. My risk becomes negligible, my profit potential becomes larger. If I have that fear of missing out, if this market starts to go without me, or I believe it's going without me, and I jump in at the top, guys, jumping in, I see people do it over here too. Oh, I sure hope this doesn't go without me. I need to get into the market. Well, what have you done? You've increased your risk dramatically, haven't you? Because you have to put that stop where the market shouldn't go. More importantly, you have killed your profit potential. Because not only are you in too high, you didn't wait for the pullback, you have to sweat out the retracement. And then by the time you get back to break even, it's just a short little run to that target area. So we're going to develop trust through repetition, trust through study, trusting that best of the best area so that we can get the most out of each and every trade. Guys, the second half of jumping in too early is saying, well, I'm going to let the market go 3 or 4 bars in the direction Because then I'm safe, right? Because then I've already got a reversal bar. It's already going. You've increased risk once again, and you've reduced profit potential once again. And these are the two most common entries. The early entry, watching ticks. The late entry, believing somehow that it makes you safer, gives you a higher chance of success. We're going to develop the trust to get in at the best of the best spot, guys. You're going to learn to believe the advantages, to trust the advantages, to practice the advantage. And this is how you're going to study it and build that trust. On your 13.2, we're going to scroll back. And we're going to do this today too. We're going to do this exercise. Going back historically, if on my 13.2 I have odds favorable momentum and I have no termination conditions, remember we talked about those circles? If I have one of those tails, I'm going to circle it. And when I circle it, I am going to see if that circle lines up on my 5-1 at an area of support inside of favorable large triggers. If it does, I have a high probability trend trade. The rules are met. I want to take a picture of this look because this is the look that I want to repeat. This is the look that I want to trust. This is the look that every day I want to be able to recognize. And then I want to come to my spreadsheet again, to my personal trade setup looks, and I want to put that look into the spreadsheet so that I can study it each and every day. So guys, this is your study tool. Give me a Y if you're with me. And it's important that you understand that this is a study tool. If you wait for a tail to form, you've missed your trade. This is only to study to recognize the best of the best setups. By recognizing this on the 13.2, you're going to be able to put yourself in a position to trust this on the 5-1. Guys, we talked about that best of the best. Remember when we brought up your first medium probability trade is going to be a 50-50 trade? It's going to be that point where the smalls have broken but the large haven't. And you need the best of the best entry, right? This is it. Smalls above, no termination. You notice how the large triggers haven't cleared support just yet? In order to take this trade, your highest advantage comes when the 5-1 has no divergence. I'm going to type this out for you. What does that mean? That means that there's no slowdown on the 5-1 at an area with the potential to break but hasn't broken. The next thing that I look for on a 50-50 trade. On my 5-1, I want strong triggers. I want odds favorable momentum. Smalls well outside of the large. And then finally, guys, the last thing that I look for, let me get my call out. I want a small window of opportunity. I want those areas tight. I want them inside of favorable large triggers. And guys, this is your new users. How to take a 50-50 trade. This is your best of the best entry when the area hasn't broken. If you stick to this plan for 30 days, as you develop your ability to read your charts, it's going to keep you out of a lot of trouble. As you grow with the software, you may add an 8-range chart. You may look for market flow confirmation. But in the beginning, if you stick to this one advantage, no divergence on a 50-50 trade, it's going to keep you out of an awful lot of losers. So guys, that's your high probability trend trade. We have high impact news coming in 2 minutes. 2 minutes, we have high impact news, guys. I'm going to leave the S&P up while we do. We'll see what it does. What do we see right now on the S&P? Right now, I have small trigger lines through resistance. My large trigger lines haven't broken. We have what could be considered a 50-50 scenario. Divergence is already printed on the 5-1, which means it's not my best of the best look. A second divergence just printed. Takes away from that look even more. And look at these split trigger lines. How many advantages do you want to have to take a trade? How many advantages are you willing to give away and still take a trade? And guys, it blew right through the mid-band. It's going right through that support and limbo back to those synthetic triggers. And there's news in 1 minute. We'll see what news does to the market. As everything that we do throughout the day in this classroom revolves around reading indicators. Understanding, there we go. There's news. Why don't we trade into news? Because things get a little crazy, don't they? What you'll recognize, though, is the patterns hold true. 50-50, support likely to hold. 50-50 pushes back to the mid-band. Large triggers don't follow. Pivot stop out. Market reverses. Odds favorable. Pulls back to the mid-band. 3 divergences in the same general area on a 50-50. And oh my gosh, it pushes up higher. Pretty amazing. Even when the market is erratic, your patterns hold true, guys. Too quick to trade. But this is the power that these patterns have. This is the power that you studying these advantages and understanding them is going to give you. It's pretty remarkable. So let's see, just for grins, if I circle that tail with odds favorable momentum, what did that look like as we pulled back? It's a 50-50. Isn't that crazy, Ed? If you scroll back and look at what happens during news, I would say at least 95% of the time the patterns hold true. Termination conditions hold. The difference is they hold for like 2 seconds until the market rockets to the next one. It's pretty outstanding. All right, guys, are you ready? High probability trend trade. Let me know if the rules are met. Smalls are below the large are wide, they're angled in the direction of the trend. If you're brand new with me and you're looking to figure this one out, to get good at it, give me a Y in the room. Is rule number 1 met? Don't be shy, guys. I know the answer. Thank you, Alyssa. So when we talk about rule number 2, the advantage of a clear path, my small trigger lines have broken through the area with odds favorable momentum. Large trigger lines have not, right? So what kind of trade is this? Is this a high probability trade, or does this become a medium probability trade? Becomes a medium probability trade. Whoops. All right, guys, so we have a 50-50 trade. Does this blue line scare me on my 5-1? Where am I looking for termination conditions? Maybe. I love your honesty, Alyssa. We're looking for termination conditions on that 13-2, right? Watch this. Cool. So we're coming through. So Bobby, mid bands are a termination condition. I love going back to the rules. Always go back to the rules. A large chart mid-band is a termination condition if the large triggers are a full bar away. Large triggers are not a full bar away. Weak triggers it would, Ed? Okay. So that's a plan that you may develop as you grow with the software. Let's do this. John Novak used to do this, and this really helped me out a lot. Is there anything about these trigger lines that suggests the market's going to stop on a dime at this blue line? Knowing what you know about odds favorable momentum. Probably not, right? Especially on a smaller chart. So guys, we have odds favorable. We have no termination conditions. What are we waiting for to identify our window of opportunity? We're going to take a trade together, guys. We need a pullback. How do I know if the market's pulling back? Does this bar tick up a little bit? Tick down? What am I looking for? Alyssa, I'm not at all. I'm looking on my 13.2. Alyssa, do you remember what's the only termination condition that I'm going to give an awful lot of credit for on my 5.1? What's the only one that's going to make me think twice? Divergences, 3 of them. 3 of them. Absolutely, John, we're looking for a window of opportunity, but before we do that, we need a pullback. And that pullback, we're waiting for a reversal bar. Oh my goodness, I don't have one yet. It's going without us, guys. Should we jump in? What do you think? How do you guys feel about a 38.96.50 entry? Because I'm afraid the market's going to go without me. Anybody? There's some of you that take this one, right? I've seen it. I've seen it. Okay, so here we go. Dab chain. Just because we're having fun, right? You're in at the bottom here. 38.96.50 because you got worried that it was going without you. There's our first reversal bar. Where's our window of opportunity, guys? Pretty much about right there. Notice that that window of opportunity extends to the large triggers too. It's a pretty big window, but I have odds favorable momentum and I have no termination conditions. I'm going to go ahead and put my entry order right about there. We'll say 99.50. It's huge, right? We'll see. We're just following rules right now. All right, I'm in at 99.50. That's the bottom of the window, isn't it? Where's the next area in the window? 90.25. Ah, didn't make it. We're in at 99.50. Because look at that momentum, Ed. What are the chances of this thing pushing up, especially with no divergence? Dab chain, because he's a good sport, jumped in at the bottom to see what happened. And Dab chain had to sit through 3 points of retracement to get to the best of the best area. So guys, if you were in at 99.50, by the time we get Dab chain to break even, you're already up 3 points. What did we do by waiting for the pullback? And guys, there's a lot of charts already posted in this room today showing you guys jumping in and trying to develop a plan based on the jump in. And I'm not saying that it can't be done, but what I'm saying is that if you're going to jump into the market, Ed, you said it was too late. Ed might have jumped into the market right here, right when we got past the blue fib, right? Ed, that's kind of the plan you're working on with this momentum? Am I calling that right? Cool. Which means that Ed jumps in, and then we get a pivot, and there's no indication that this is where that market's going to pivot, is there? And it blows right past him to the area inside of favorable large triggers, and then it does what it does. Guys, the reason we focus on the best of the best initially is because it helps you understand that the market does, in fact, move up and down, fear and greed. And all the market is a battle between buyers and sellers. The sellers are in control. And then on your smaller, faster chart, you can see where a couple buyers test the waters. This little test of the waters gets us back to the best of the best area, guys. And then that thing just continues down. Rule number 3. So hypoxic, rule number 3 says that I'm going to use a limit order. I don't know where the market's trading right now, 39.08. I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So the area can be a mid band, it can be 1-to-1s, it can be fibs. The idea is that I'm going to put a limit order just above. Or in this case, since it was a short trade, I put a limit order just below those 1-to-1s, that lowest area of resistance inside of favorable large triggers. Does that make sense? So this is kind of, guys, I never know where anyone's from, so I always ask this. Hypoxic, did you play Little League? You play baseball? Okay. So, and this is the analogy that kind of works for me. When I played baseball, let me get my pen here. This was little Mark Novak, catcher extraordinaire. That's what I did. I was a catcher. Over here was John Novak, pitcher extraordinaire. Well, if John throws the ball and it gets past me, there was a backstop that stopped that ball, that gave it a place so that it wouldn't just keep running through. These areas inside of favorable large triggers act as a backstop. The market pulls up. Not only do we want to see him close the gap to the large triggers, but we also want something, some form of resistance for that market to bounce off of. Guys, this is a plan that has been put together over 20 years. This is a plan that has been proven to win more often than it loses. So you study this plan in the beginning, and it gives you the ability to recognize these advantages. It gives you the ability to see when that momentum's in your favor. It gives you the ability to recognize when there's absolutely nothing in the way. And it gives you the ability to identify that area where the market is likely to continue. And the more you learn to recognize these abilities or these advantages, the easier it becomes to recognize and to take these trades. I'm going to put a circle over here at 9:30. Let's just see what it looks like. Guys, we're trading directly into a magenta line there, which means that this is a potential termination condition. But even with that line there, I want to see what that pullback looked like, because we could probably still develop a little bit of a plan, a little bit of trust, if you begin to recognize over and over and over just how often price pulls right back to support inside of favorable large triggers. If you see this 10 times, it may be a fluke. If you see this 20 times, you're like, all right, there might be something to this. Guys, if you go through and you spend 30 days focus on nothing but the best of the best entries, and you literally scroll your charts back as far as they'll go and you look for these opportunities, it's going to teach you that they definitely show up all throughout the day. It's going to teach you that they don't happen one after another, that you have to be a little patient. It's going to teach you that you can, in fact, make money with a high probability trend trade. And it's going to teach you to recognize advantages, to be able to read your indicators, and to feel comfortable with committing to those best of the best looks. And then you will develop a plan. There's no doubt in my mind, you will develop a plan that takes you outside of high probability trend trades and gets you into medium probability trades. What you are going to do during the learning process is you're probably going to take a lot of low probability trades on accident as you begin to learn your lessons. Guys, when you take a low probability trend trade on accident, let's say, I don't know, I'm looking for a common mistake. All right, maybe you go short right here after a third divergence on a 50-50 trade. If you do, post that picture in the room. Let's talk about it. Let's talk about the mistake that was made. Let's talk about the advantages that you gave away. Maybe you tried to go long right here at a pivot stop out 50-50 with two divergences and you got stopped out and you can't for the life of you figure out what's going on. Make sure that you post your picture in the room so that we can have a conversation. Now we have a pivot stop out that creates a full reversal that gives us a 50-50. Are you with me? I can activate a limit order at the bottom of my window of opportunity. But if this turns into a reversal bar that turns into divergence, probably going to cancel that order. Guys, that's the first hour. These are your best of the best entries. This is exactly what you're looking for in the first 30 days. When I come back, we're going to look at some of your charts, but we're also going to talk about building a plan. We're going to talk about helping you write a plan, a set of rules that you're going to commit to for 30 days to help you nail these entries, and then how to start working on a management plan to get something out of those great entries. Guys, I'll be back in a few minutes. If you take a trade, post a picture. If you haven't posted a picture in my room yet, take a picture of your charts. Let me know what you see. Just type on it. Take a picture of your desktop. Let me know what you see. But let me know that you can post a picture, guys. One of the most important parts of the educational process. I want to know that you can do it, and if you can, I want to help you do it. I'll be back in a few, guys. All right, guys, I am back. Quick little break. Hypoxic, absolutely. We'll talk about that one. Let's do it like this. Let's take a quick conversation about it because I think when you know what to look for, it becomes pretty easy to study. So I'm going to scroll back on the 13.2 and I'm going to find a mid-band where it happened. And of course, we're going to have one of those days. This is a pretty good example. Not quite a full bar hypoxic. Price reaches the mid-band. We have odds favorable, but those large triggers are so far away that it closes the gap. Let me find a better example. You even see it right here. Resistance is met. See how the large triggers, there's room for a full reversal bar? This is enough to keep you out of long trades. The termination condition should be, but recognizing that distance between the two. This one is picture perfect. There's a mid-band. See how price reaches? Large triggers are a full bar away. This lets me know that this mid-band is likely to stop the market. And if you just keep scrolling back, you begin to see this happen quite a bit. Once again, hypoxic. Mid-band is reached. Large triggers don't follow. And the easiest way to recognize that, Ron, thank you for the heads up. Let me get over to crude. Mid-band reached. Large triggers are a full bar away. Ron, I wish we could have been there sooner. So hypoxic, what you see is that when price reaches this mid-band, let's take a picture. And you're starting to think to yourself, man, odds favorable, momentum, everything's down. This looks great. What you're going to see on your 13.2 is that white line right there. This is your reversal bar marker. And what this reversal bar marker means is that that's the point at which this bar becomes a reversal bar. So if your large triggers are above that reversal bar marker, this mid-band is going to act as resistance. If your large triggers have already made their way below that reversal bar marker, the likelihood of the mid-band stopping the market in its tracks reduces greatly. So this is how we identify that mid-band as a potential termination condition. The cool thing is too, is when price pulls away from the large triggers, it tends to snap back. That's how we get our entries on a smaller, faster chart. Price pulls down, snaps back to the large triggers. We use those areas inside as the bounce point. This tail on the 13.2, remember 1 bar? This tail on the 13.2 is this pullback. So we can identify where this tail is going to happen typically by where those areas of support or resistance inside of favorable large triggers are. Did that help a little bit, hypoxic? You'll see that it closed the gap. Awesome. If you go through and study this, you'll start recognizing it a lot. And then even more so, you'll be able to take all of your indicators off and look at the market and go, oh, I bet that was a mid-band. You'll be able to read these patterns so clearly that even without indicators, you're going to begin to understand what was probably happening. It's pretty cool. And it's not that it's a long trade off the mid-band. What it is it's no short trades in that little area, in that vacuum from the two. All right, so we've talked about the rules, right? We've talked about the advantage of momentum. We've talked about the advantage of a clear path, and we've talked about the advantage of entering the market where it's likely to continue. This is your first 30 days. And guys, there's 2 things that I want to remind you. The first thing is is that you don't control the market. The market doesn't care about you or your tiny little contracts. Doesn't matter to it. Not even a little bit. The market is moved by large pocket investors, by big money investors with millions of dollars and thousands of contracts. And these are the people that create tops and bottoms. These are the people that create momentum. These are the people that do all of the hard work, that fight it out at Fibonacci areas so that we can take advantage of it. We're not the market movers. That's the sharks. Guys, you're the remora. Be the guy that lets them do the work. Be the one that lets them fight it out. And then we'll take advantage of everything that they do. That's exactly what the high probability trend trade teaches you. It lets the deep pockets investors create momentum. We can identify through Fibonacci where these guys are going to fight it out. And then we can take advantage of potential entries. Look at when you get to a key area, look at the scramble on your 5-1. Look at the scramble on your 5-1, guys. This is the fight between sharks. This is sellers and buyers and sellers and buyers, sellers, buyers, sellers, buyers, sellers, until the buyers finally win. Once the buyers finally win, we look for our shot. And you'll see this. If you scroll back to key areas, you'll typically see it scramble on your smaller, faster chart as we approach key areas. You get that scramble as it comes down. Where is that? 9:30? That's even later. Scrambles. It's almost a matter of know your place. So, how do we catch it? What are we looking for? Guys, let's do it. Let's write a plan that gives you the best chance of success for 30 days. If you have never written a plan, guys, I had somebody tell me that if you don't have a plan written, you don't have a plan. And that goes into that whole failure to plan, plan to fail scenario. We're all sorts of cliches today. Your plan for the first 30 days should do nothing more than identify your best of the best entries. Give you the best chance of success, a statistical advantage each time you pull the trigger. Use the phrase "my trade is" to define your entry point. My trade is the high probability trend trade. Not Hypoxic's trade, not Ed's trade or Ron's trade, but my trade, Mark Novak's trade, is the high probability trend trade. And this is a trade that typically wins 70 to 80% of the time. I'm studying it. I'm trying to disprove this. Because honestly, I think that Novak fella's full of beans. So I'm going to commit to this look and I'm going to prove him wrong. Do that. Go into it with that mindset. Triple dog dare you. The conditions of this checklist must be met in order for me to enter the trade. Period. That's it. I'm committed. The only way I get in the market is if these rules are met. I'm going to take pictures of my perfect entry. Maybe through study, I go back every time I study one of those pictures. I put it in here. And then we start talking about growing the plan. Guys, from this point up, this is your entry for a high probability trend trade. As your plan develops, maybe on day 31, you start looking for those 50-50s. So you write out the rules for the 50-50. In order to take the 50-50, no divergence on my 5-1. I want strong triggers. And then put a picture of that perfect 50-50 entry. What's it look like? Well, looks like odds favorable, 50-50, no divergence, perfect entry. I'm only identifying my entries, guys. That's all that I'm working on for the first 30 days. That's it, Ed. Say you must have a plan. Here's your plan. Track every trade. Here's your trade tracking sheet. Guys, there is absolutely nothing that you need that Nexgen has not provided. The only thing that we can't do for you is make you do the work. We can't make you study. We can't make you simulate. I can't make you practice. I can't make you post in the room for feedback. That's on you. You have to decide if this is what you want enough to do the work. 30 days working on entries. Well, from that 30 days of entries, you're going to have to do something with management, right? You can't just hope. Your ability to read your charts is going to help you manage trades so much more. So keep it mechanical in the beginning. Keep it very methodical. Don't stress yourself out wondering what the market's going to do. This is the most simple approach to management I've ever seen. So I put it in the example plan. I will trade 2 contracts and my initial stop will be 12 ticks. When I set it up in my ATM strategy, it's 12 ticks, period. That's it. That's where my initial stop is. It'll be moved above or below the window of opportunity. This is my first no need for opinion move of my stop, putting it where the market shouldn't go. I'm going to enter at the correct spot because I'm following rules, and now my stop is outside the window of opportunity. And then it says it'll be moved 2 ticks above or below the reversal bar in the direction of my trade. Mechanical, methodical, no hope, no wish. Just do it. That's what the rules say. It says I'll take profits on my first contract at $100 and move my stop to break even. Mechanical, not hoping it goes for more, not moving my targets, not moving my stops, following a very rigorous defined plan. I'll take my second target at 200, which means that in this trade, I'm looking to catch for $300. A $100 move and a $200 move. The reality is in the very beginning, guys, that first 30 days, you're probably going to have a bunch of moves that are $100 and break even. But it's not about making money for your first 30 days. It's about trusting the process, understanding the rules, following the rules, getting feedback on your ability to follow the rules. And remember, you're going to take a picture of everything that you do. And when you take those best of the best looks, you're going to begin to understand when you could hold for more, when you should have gotten out sooner, when it was appropriate to take more profits. And you're going to build a management plan, and you're going to start to take pictures for a management plan. Great entries coming in. Divergence says to get out. And you'll develop your management plan. So guys, this weekend, if you haven't already done it, I'm going to put this in the room for you again. Steal mine, make it yours. I'm okay with that. I'm here for you guys. There's the example of the management plan. Write your plan. Send it to me. Make sure that you understand the checklist. Here's the checklist that has all of the pictures on it. Use it. Study it. And then, guys, finally, here's that high probability trend trade checklist that you should print out and put on your desktop, and make sure that you're following your rules every time you take a trade. That's your first 30 days. Guys, your first 30 days is your first 30 days with Nexgen. It's your first 30 days committing to a plan. It's your first 30 days refocusing to give yourself the best of the best. So that's our first hour, guys. It's an hour and 20 today. I'm a little long-winded. I apologize. But here we go. We're going to write a plan. Your path for success, guys, the quickest path to becoming a proficient trader, a confident trader, is post your pictures in class, track your real-time performance in a spreadsheet. Well, you guys have been posting in class. I appreciate that. I'm going to scroll up and we're going to start looking at your pictures. I'm going to go through, I'm going to see everything that you posted. We're going to talk about it. When we talk about it, if you have questions, let me know. I do scroll back and forth. So if I miss a question, Let me know if I missed it, and we'll take a look at it. I'm scrolling up to the first. Dab Chain, you put your first picture in there. I can't tell what's going on. And does it matter what the rules are if they're not followed? I suppose not. So this goes back to, guys, do me a favor. Put your rules on a chart. Let me know why you did what you did. 53,000 looks amazing, doesn't it? But what if you can't repeat it? One of the biggest things that happens is I'm a simulator millionaire. And the second I go live, I don't have a plan that I follow, and I get my butt handed to me. So I see it all the time. I see it all the time. All right, let's see where we're at. Who is this? This was... Oh, so much scrolling. This was John. John, let's see what you have. Strong bottom, he means a pivot stop out, right? Odds favorable, smalls above. The smaller through the area, the larger not. It's a 50-50 trade. Coming from a strong bottom. You take the pullback to the area of support inside of favorable large triggers. Guys, some people will take a 50-50 with divergence. Some won't. John, your execution is absolutely perfect. Right in that window of opportunity, your stop keeps you safe, and you're able to get paid on both of these. John, I like everything about this trade. It shows patience, adherence to rules. You've identified all the advantages. Beautiful trade. Guys, sometimes you'll post a picture in the room. Dreo gave us this one. It's hard to make these pictures bigger sometimes. He has strong triggers, and he has no termination conditions, and he has an area of support inside of favorable large triggers. And he was asking, is this a good-looking trade? So what I did is I put the rules on there, and he fit the rules perfectly. And the only thing that we noticed that may have been problematic, let's see if I can make this bigger. The only thing that may have been problematic was that he had that split trigger look. So his window of opportunity went from a mid-band all the way down to support. And guys, you'll notice it never broke support, but he got stopped out inside of those synthetic triggers coming up. So we got to have a great conversation about what that best of the best look is. It's a nice trade. It's a rules-based trade. I like it. Michael Bogatin. Still momentum. Not the best of the best, but still momentum. No divergence. Perfect entry. Michael could have moved a stop behind the reversal bar. Just didn't work. Did you follow the rules, Michael? Are you with us in here? That was you, Joel? Was that yup, you're in here, or yup, you followed the rules? It could be both, right? Awesome. So Michael, you get to be today's example. Anything that wins 70 to 80%, we're my math people, has to lose 20 to 30, right? Just, it's a fact of life. So when you take a trade with every advantage and it just doesn't work out, guys, stay happy. You gave yourself an advantage. You gave yourself every opportunity for success. You took a trade that statistically wins more than it loses. You followed your rules. You stuck to your plan. And it just didn't work out that time. It's a cost of doing business. This is one of the reasons why posting your pictures in class is so important. Because a lot of times people take this trade and they begin to lose faith. They're like, ah, it just doesn't work. It's not working. This isn't great. But if you take this exact same trade, and we had a great example at the end of class yesterday. On the ES, there was a high probability trend trade short that lost. And on crude, there was a high probability trend trade long that won at the exact same time. All right, Bobby T, let's see what you've got. It's making me confirm. There we go. Bobby T, smalls below the large. The large are wide. They're angled in the direction of the trend. Look at this. Bobby T uses a checklist. Perfect entry at a mid-band inside of favorable large triggers. First target reached. Second higher divergence prints. He gets out break even. Beautiful management. And then the rules aren't met. And you try to get in for that second time, Bobby T. One rules-based trade, put money in the bank. And then you gave it right back by breaking your rules. There's a lesson there. John Novak gave us a trade. Woo, it's a big one too. Holy smokes. Well, I love this one. Guys, this is odds favorable, no termination conditions, pull back to support inside of favorable large triggers. Everything looks so good, he added on to the position on the reversal bar, took it all the way up to that place where the market was likely to stop. Guys, that is textbook high probability trend trade. That's coming from the guy that wrote the software that trades it every day. He's following the exact same rules that you were just given. Dab chain. About 1046 you got in. 1050 actually saw what you expected, but in too early. So let's look at entries. Man, Dab chain, you're busy. And I'm going to go through the read. I want to make sure you get everything on this. Saw the pullback and wrote it down because you were bored. Sat on your hands, then bought 3 more at the next pullback. Still cool and now 50-50, but good trend. Was too far away, expected down here. Now waiting to see where she goes. Poised to sell all 6 and forgot and bought 6 accidentally. And then the dust settled. All right. So that's awesome that you're writing exactly what you're thinking and what you're seeing, especially if you're new. And let's do this. Everything set up. There was your entry. Easy peasy, right? No reason to go short because everything says up. We eliminate that one. No reason to go short. Everything says up. We eliminate that one. And if you just focus on this one, easy money all the way up. No reason to jump in. No reason to jump in. There's your entry. You've increased your risk. You've decreased your profit potential. You've increased your risk. You've decreased your profit potential. So check this out, Dab Chain, and I hope that you get this. 2 picture perfect trades. 2 absolutely picture perfect trades. Just a little bit in commissions. Easy winners. Everything says go. Everything's manageable. 3 divergences in the same place. Says stop trying. It's done. It's hard at the beginning, guys. When I first started trading, I would take 40, 50 trades a day because I wasn't following a set of rules. Dab chain, if you start off, if this is green and everything's going up, get rid of these cells. It's not worth the fight. One of my absolute favorite books ever written, was How to Commit Financial Suicide by John Novak. Fight strong triggers. Get you every time. Fight those strong triggers. The market is more than happy to separate you from your money. So the idea on this one, dab chain, is we get you to a point where if everything's going up, go long. Wait for the pullbacks. Make it manageable. Your entry at 73 had almost 15 ticks of risk on it. Had you waited for the pullback here, that goes down to like 6. Pretty cool, right? Man, lose the sells, stick with the trend, respect the terminations. You have at the top questions. What does that mean? Let me go to where you posted here and see if I can find it. I've only got one chart from you at 940. Are you talking about the ones you posted yesterday? Let me see. I thought I responded to this one. Doesn't matter. I can't see what you're doing. There's just not enough information. I can't tell where you're buying and selling. So it's difficult for me to see what you're doing. Same thing here. Difficult to see what you're doing, where you're getting in, whether or not there were pullbacks. This was a middle of the night straight run. And you just kept jumping in, right? Are those the ones you were talking about? It only loaded one picture. I don't think you can load 5 at a time. So when I look at my stuff, it should be the same thing you see. Whoops. There's only one picture on that upload. If you want to upload the other 4, I got you though. We'll talk about everything. I'll be glad to. Hypoxic gave us a picture. So Hypoxic, great example, and I think that you were asking about that vacuum as well. Notice how price pulls all the way down here. Absolutely no trigger lines break through support. That in itself is a termination condition. And that distance back to the large triggers lets me know that jumping in at the very bottom, no pullback, no favorable large triggers, man, that's a recipe for just getting pulled out of your shoes. And I think that what we talked about probably helps with this trade, but rule number 2, termination conditions, got you right here. Remember the rules for termination conditions. Price reaches an area. Where are my trigger lines? They're all above. I'm not looking for short trades. The flip side of that is, look at this. Look where all your trigger lines are. They haven't even broken through this top area. Great indication that we may be still going up. Ed, jumping in, pulls right back. Jumping in, take it to resistance. In the ES, you wait for the pullback. I like it. And then NASDAQ jumping in, taking it out. You are busy, Ed. This is probably great for your brain, though, isn't it? Keep things moving. Yuri, good morning. It's good to see you. Awesome. Thanks, Dab. I'll grab those. I'm going to go through the list here. We're going to see what Yuri did. I know exactly what Yuri did. Guys, when I talk about having a plan, Yuri, I'm gonna praise you for a second. I hope that's not awkward. When Yuri shows me a trade, I can put it up against any of the trades that he's shown me in the last 60 days. They all look the same. They all have strong triggers, they all have no termination conditions, and they all have an entry inside of favorable large triggers. And I know whether or not it's medium probability or high probability, because if Yuri trades 2 contracts, he knows it's the absolute best of the best checklist trade, and he's going to make his money. If he trades 1 contract, it means that it's a 50-50 or a little less. Guys, I know his plan. He doesn't have to put his rules on his chart. His rules will become painfully obvious to you as you grow with the software. Yuri, thank you for your consistency. Thank you for sticking to a plan. You're really proving that when you stick to the best of the best, when you take these trades and they all look the same, it's not terribly difficult to be successful. NG time. You went short with everything up and it looks like it took your money, right? 21.3, everything says up. 13.2, mid-band. Triggers are a full bar away. NG time. Mid-band, triggers a full bar away. Shouldn't have been a trade there. No matter how pretty this was, shouldn't have been a trade. And then you wait for everything to agree and it looks like it becomes pretty easy. You just didn't trust it. What happened here? First target? Oh, first target break even. Never mind. You got it. Mechanical. I like it. Still in the good stuff. Watch that vacuum. Alyssa, let's see what you did. Oh, look at that. Rule number 1 is met. Strong triggers, no termination conditions. Awesome patience, Alyssa. Beautiful entry, and you make money twice. Alyssa, can I ask you, was that pretty easy? Were you comfortable taking that trade? Like, no nerves? Feeling good about it? Because this is beautiful. Isn't that great? Thank you for posting. Alyssa, you had stayed very quiet for a very long time. Does it help to post in class? This is me asking rhetorical questions for the sake of getting more people to post. I appreciate that you do, and I'm even more thankful that you're finding the help that you need to take this absolutely beautiful trade. Let's keep doing that every day. Great job. You guys don't realize this, but I get like little proud daddy moments when y'all nail these trades. Michael Bogatin, everything points down. You are directly into a termination condition. 100% into a termination condition. You say, you know what? I'll take a shot at it. You get in at the best you manage. I'm not sure I would have lost money. Yeah, bad management. I agree. Not great management. Great entry, made that first profits easy. Break even on the second. When I'm trading into a termination conditions, well, I won't. But if you're trading into a termination condition, there's got to be something in your head that says, all right, maybe I don't have to get 20 on the second. Maybe I take that 17, and then if it breaks, I'll take some more. It's a good-looking trade. The execution on the entry is nice. You just held a little longer than your indicators told you you should. NG time. I think we already saw that one. Talked about it. All right, Earl. Nice to see you. Now, did you steal this from John Novak? Because that sure looks like an amazing high probability trend trade from a perfect bottom with everything in the... Man, what a great looking trade. You guys know what I like to do sometimes? When a trade is this pretty, I'm going to steal your trade. I'm going to put it in my spreadsheet. What's the best of the best look? What am I looking for? There it is. As you're growing with the software, doesn't it make sense to get as many pictures of the perfect trade as you can? And guys, I'm building this one because we keep making it available to you. Coming through. I'm building my plan. Yuri, I would be remiss if I didn't get you in the spreadsheet today as well, because you, my friend, are consistent. You have a plan, you commit to the plan, you stick to the plan, and I see you making money a lot more often than you're not. All right, dab chain, trusting the trend and momentum, buy a couple more pullbacks. They are getting more frequent. So let's look at what you did again. I love this one. Really watching here. What did you miss? So strong. Crossing over again and then craps out and you're down fast. So, all right, dab chain, let's take a look and let's talk about it. So you jump in. Once again, not working those pullbacks. Jump in, make a little money. That's cool. Feels good, right? That's hard to replicate. Jump in again as the areas break. And look at that. Pulls right back to support. That's a lot of sweating, isn't it? Get rid of that one. Wait for this one. Absolutely perfect. And then you buy directly into resistance. 6 ticks. Instead of jumping in with this contract, why not just have it down here? You have 1, 2, 3 contracts going into resistance. What's the difference between getting in at 48 and out at 72 with 3 and what you did? Do the math on that. Let me know. You got 11 on this one instead of 24. And you got 6 on this one instead of 24. It's a big difference, isn't it? That's a lot of money, dab chain. A lot of money. And then you have anything can happen triggers. The area is broken. You have 1 loss of momentum. Once again, if you waited for that area of support to enter, and notice that it's already below your large triggers. If you had waited for an area of support, you're in back here, down 75, 74. And then when that second divergence without odds favorable momentum prints, you could have been out break even, and it starts railing back because you don't have that momentum. You have 2 lower divergences. Your small triggers are inside and now below the large. There's no areas inside of favorable large triggers. And you get out. You're keeping busy. I like it. And you're talking about what you see. I like that as well. Couple things to remember. Entering from the areas makes it more manageable, increases profits. On this one, you're going with the trend all day long. I love that too. That makes it easier. And here you say in a bit of trouble, but you think it'll bounce at the line. What makes you think it'll bounce at the line? Going to get out as soon as you're up $1. Did some extra buying to manage you there faster because this one is looking tired. Closed it for a couple hundred in profit. See how this market continued up, dab chain? And not just dab chain, everybody. Price, everything exceeds the area. Trigger lines, price, everything. It accelerates away from those triggers. The trigger lines don't follow. This keeps you from going short. There's no short trades. When everything starts to agree again and it breaks above these large triggers, it probably gave you a little opportunity to get in and continue the move. That's a good picture. The way you talk through what you see, I like. Notice that you say, I think, a lot. Your goal can be a silent goal. Should be to work your way into my indicators say. My indicators say I'm going up, but I don't have a lot of momentum. My indicators say every area is broken, and these are the areas of support that are likely to hold. My indicators say that this is my best spot for entry. My indicators say that I took a perfect exit. My indicators told me that I was losing momentum. My indicators also told me that the market's probably going to continue up. So I love the way you're doing it. Language becomes important as people grow with the software. And indicators say, as opposed to I think, I hope, I want, goes a long way. Didn't take the sideways, took some profit. All strong, looking for pullbacks. Just waiting to get in at that area. You're in at 41. Your resistance is at 50. You're jumping in, you're getting closed out. Just that deep breath. Deep breath, relax. Wait for it to be the best. And it didn't give you an extra entry, did it? It just went right up to those 1-to-1s. Dab Chain, you're doing great. The fact that you're annotating your charts about what you see, we'll have conversations every day. Print that checklist out. Put it in front of you when you're taking these trades. And just maybe write huge. I'm going to wait for pullbacks for entry. I'm going to wait for pullbacks for entry. And see if you end up making a little more money. Believe this is Gary. Small's below, everything's below resistance, no divergence. You take that little pullback, bring it down, make your money all the way down. Gary, nice job following the checklist. That checklist works, doesn't it? Joel, would this be considered a good top? I like your question, Joel. What's a good top, guys? There we go. There's your definition. So Joel, are you with me in here? Would you consider that to be a good top? Just based, absolutely. I would agree with you 100%. 100%. That's a good top. Is that a good bottom? Guys, I think one of the things that you forget, no, not at all. Watch this. Is this a good bottom? No. Is this a good bottom? Yes. Is this a good top? No. What do we think about this one? Is that a good bottom? I like it. A little bit of overrun. Pivot stop out. So guys, there you go. There's that good top. So now watch this. Does this good top... Oh, I thought that picture was over there. So let me do this again. It may be the same top. Does this good top, let's pretend that they're different, look just like this good top? Of course it does. And it looks like this good top and this good bottom. Guys, you can scroll back. There's another good top. And I think that this is part of where new users, and I'm not saying that you guys are averse to hard work, but this is one of the things. What if all you did was scroll back for 10 days, took a big picture of termination conditions, and said strong top in place, and it's 3 divergence, in same price range. There's your large chart version of it. But check it out, guys. Didn't make it, right? Made it, but the small triggers break through. And then there's that solid looking one that gives you a full reversal. That gives you that odds favorable, and that market disappears in the lower right-hand side of my screen. Does anybody in this room feel like if you took 30 minutes to do that, you might come up with some pretty awesome information? I love this, guys. I love these drills, and I'm not going to lie to you. I didn't follow my own advice for the first 6 months. Hypoxic. Check it out. Where are my large triggers, guys? Do you see it? As I reach support, where are those large triggers? Can anyone else hear the Hoover vacuum firing up? Pretty cool, right? It doesn't have to pull back, but if I know that that's likely because of patterns that I've studied, keeps me from the short. This termination condition should keep me from the short. That should just reinforce that shorts are probably not my best bet until we break the area. It's likely to stop the area, but it can break. Good stuff. Let's go to the next chart. Guys, I love chart reading. Makes me happy. Yuri. Smalls above the large are wide, no divergence, perfect entry, money. All right, guys. Doesn't Yuri's long look exactly like Yuri's short? Strong triggers, no termination. Entry at the area inside of favorable large triggers. Strong triggers, no termination. Area at the entry inside of favorable large triggers. There's something to be said for consistency. All right, I'm going to try not to mess up. T3, is that right? Did I say it right? It's been a while since we talked about it. Beautiful. Odds favorable. No terminations. Pull back to support inside of favorable large triggers. Man, I'm stealing this one. This one's going in my spreadsheet, guys. How many of you added to your spreadsheet today? Anybody? Is anybody else stealing these pictures, putting them in your spreadsheet because you want to be better than you are today? T3, I said it right? True story. Every time I see your name, I'm like, don't mess it up, don't mess it up, don't mess it up. Thank you for correcting me when you did. Little things, I don't know why. Little things like that are a big deal to me. So I appreciate that you did. All right, Gary, let's see what you did. Gary says 50-50, smalls are through, large are not. I don't see the loss of momentum. I do not see the loss of momentum, Gary. I'm seeing no divergence on the pullback. Stop keeps you safe. Market flow confirms. Maybe you wait for the market flow. Quick profits. If you're going to take a 50-50, you had a pretty good shot at it. NG time. Your pictures are getting smaller and smaller. 13.2 directly into a termination condition, but without divergence. You take it anyway and you manage out aggressively. NG time, do you see how you gave away the advantage of a clear path? All right. It's important to me, guys. I love it when you win. Don't get me wrong. I love it when you win, but I want you to win more than you lose. This is a rough look. especially with the large triggers. How many areas are that below? It's below this resistance. It's below this one. You're coming right off of resistance. None of your trigger lines made it through. It's a pivot stop out at resistance on your 8 range. Little bit of hope fueling the fire there, I think. Bobby T, take care. Thank you for being here. And Gary, there you go. No divergence on the 50-50. Get in, manage out. Good chart reading. Guys, you're doing great today. I love the pictures, and I'm seeing a lot of rules met. Ask yourself, do I win more when I follow the rules? Ed S. Brock Lesnar on double steroids. That's a big Brock Lesnar. But doesn't it make sense if a market requires a different plan that you adjust? Dab Chain, you made $53,000 pretend dollars last night. I used to do this when I taught a 101 class. Oops, I messed that up. Totally messed this chart up. Let me fix it. Sometimes you're going to break charts, guys. Know how to fix them. So, Gary, if you second guess yourself, don't take the trade, right? I mean, I think that's probably the best option. If you're, and I have this, when I wake up in the morning, before that first cup of coffee, I see things and I don't necessarily think about it. And I might mess it up. All right, so watch this. Guys, this is not a real trade. Whoops. We're going to see if we can make something happen for the sake of discussion. It's not going to let me do a huge amount. So guys, this is simulator. So when I'm on simulator, I'm doing two things. The first thing I'm doing is I'm practicing a methodology to see if it gives me an advantage, right? Practicing following rules. I'm practicing the proper entries. I'm practicing the proper exits. I just made $4,000. I made $4,000 fighting momentum. I made $4,000 trading into the bottom of a fib. Guys, what is the likelihood that I'm going to make that same $4,000 if I fight everything? Slim to none, right? Snowball's chance. Pick your cliche. So Dab Chain, I'm not picking on you. It feels good to see 53,000 here, doesn't it? You're like, ah, 53. But what you're doing, man, is you have absolute balls of steel on simulator. Or for my lady traders, you have ovaries of iron. I don't know. But what you're doing is you're taking trades that if you took the exact same trade 100 times, it would probably lose 90% of the time. But because you win the one, you think it's a great trade, and then you decide to go live, and you're separated from your money. And that's it, Ed. Simulator millionaire. So I'm not picking on anybody. But because of anything can happen triggers and divergence and a loss of momentum, it was pretty easy to grab $4 grand right there. But the reality is, here I lose it. Here I lose it going the other way. Here I lose it again, you know? But then you come through with everything below and you take that rock star entry. This is repeatable, isn't it? Dab chain, you can do this one over and over. Dig it. Gary, I haven't met a trader yet that didn't absolutely crush it on simulator. And when the pressure was put to them, my wife and I had this talk yesterday. When the screws get turned and you're no longer trading the process that gives you an advantage, but you begin trading to make money. Listen to what I'm saying. I go from trading to try and take the absolute best entries, to try and manage without emotion. I go away from the process and I focus on the money, which means that I've added an entirely new level of fear, right? I'm afraid of losing money. I'm afraid of getting stopped out. I'm afraid because things aren't about the process anymore. Guys, I had probably the worst day of golf I've had in a long time on Monday because I was worried about shooting birdies and par, and I forgot how to swing a darn club. I was stiff. I cut my distances in half. It was horrible. It was the worst round of golf I've had in a long time because I abandoned the process and focused on the score because I figured I was due a good score. So today, despite 40-degree weather, I'm going to go play another 18 and I'm going to focus on the process and see if I can have some fun. Maybe do it right this time. Right on. So dab chain, let's start building habits that keep you a millionaire. Yeah, absolutely, Yuri. And my wife is super pragmatic. Super pragmatic. She was a cardiovascular surgery nurse for 20 years. If she makes a mistake, people die. And that's how she approaches trading. Follow the rules, let people live. It's pretty cool. I'm excited to have that team, that duo. Yeah, live can be a little bit different as well. Absolutely, Shane. Well, and that's why we say if your area is this fib, dab chain nailed it. Go a couple ticks below. Don't trip over pennies. What'd we miss? Divergence, anything can happen triggers. Good stuff, guys. The more we talk, the closer we get. Look at these triggers on the 5-1. Notice that indecision right at key areas. Anybody ever seen this before? Guys, it takes a few days for you to realize how powerful these Fibonacci areas are. Guys, I'm going to take a few minutes. I will be back in front of you in the next 5 or so. Last hour is going to belong to you. Last hour of Friday, guys. The market tends to settle down a little bit. I'm going to answer as many questions as I can for you. Keep asking them. Dab Chain, take care, man. I'm enjoying having you in class. You're doing a great job. Keep focusing, man. You're doing. Stay safe out there. I'll see you next week. Enjoy your weekend. Guys, I'll be back in just a few, and we will rock it out for the last hour. Back in a minute, guys. All right, guys, I am back. Ed, I have no idea what TradeSync is or EdgeWonk. NG time, same one. Termination condition. Out at the termination. Taking some chances. TraderSync, the best trading journal to boost your performance. All right. I don't know. Hold on. I don't know that it would be any different. So if I looked at this, if I come through and I look at isn't this the same thing, Ed? Profits, trades taken, winners, losers, average winning, average loser, ratio, largest losing trade. I'm not sure. It looks similar. So NinjaTrader has that for you. It's got that. It's got a log that tells you what you did, shows your accounts, your positions, executions, strategies. Under account performance, there's graphs, executions. All right. So hear me out, Ed. Hear me out. If you're taking a picture of everything that you do, can't you identify for the sake, hey, Joel, take care. Can't you identify for the sake of education, bad entries and bad exits? Can't you put a timestamp or look at the timestamp and see when you're making the most money, when you're not? You could even go through, and I get it, and if you look at your executions, maybe that's it. It'll go through. So, I mean, I guess. Does it tell you how to fix your bad entries? Does it tell you how to fix your bad exits? Are its rules your rules? I don't know. I say use it. If you think it gives you an advantage, use it. Have fun with it. I don't know anything about it. They probably have a free trial on it, don't they? I'm a big fan of free trials. All right, NG. I love this one. Termination, full reversal, odds favorable. Pull back to the area and you get paid. Nice job. If you're going to use an 8 range, when you get divergence on a 50-50 with a reversal bar, it might let you save a couple pennies on that one. Nice trade. It'll tell you how to correct exit or entry. I'd be curious to see it. I think that's pretty awesome. Gary, I love the pre-trade picture. I'm a huge fan of the pre-trade picture. Odds favorable, no terminations, area for entry inside of favorable large triggers. Every chart agrees, every rule is met. Man, I would feel good about that order placement if I'm a rules-based trader. Ed, that's pretty cool. I guess you input your rules into it? And Gary, that one didn't work out, did it? That is part of that 20 to 30% of doing business. And now we have 50-50 window of opportunity. That's pretty cool, Ed. If you do it, like, keep us posted. I'd love to hear how that's working out. Everybody learns differently, right? Everybody sees things one way, feels good about stuff one way. I will not ever put down somebody else's trading software because it may work for you better than what I do does. Doubt it, but it can happen. Some people hear things differently. They see things differently. They read things differently. And because of it, different strategies, different trades, different everything works different for different people. Guys, there was a 50-50 with no divergence. Just saying. I'm going to show you guys how to reset your simulator because I don't feel good about seeing that 4,000 there because that was ridiculous, right? Tools, options, simulator. Guys, this doesn't erase mistakes. What this does is it just clears it out. Maybe you want to start fresh for the day or something like that. Clears everything out. Gets the writing off of your screen. All right, so let's talk. If your rules say that you'll take a 50-50 with no divergence, I had this conversation with someone yesterday. My rules say that a 50-50 with no divergence, I can take this trade. If it's still a 50-50 and divergence prints, am I going to stay in this trade? Now my entry conditions aren't met while I'm in the trade. Do you stay in because you're already in? Or do you have an exit plan that says if divergence prints on a 50-50, I exit? Have you guys thought about that? Mine says I exit. These are the things that you have to think about every day as you write your plan. If then, if I do this, then I do this. If this happens, then this is what I'm going to do. And you keep working on those things over and over until they work out, until you get good at them. Guys, I just got a, yours says you stay in with a tight stop. All right. Fair enough. But you have a plan, right? That's it. That's all you need. Mine says get out. Yours says stay in with a tight stop. You're going to win some. I'm going to win some. What's right for you may not be right for me and vice versa. Guys, I just got a private message that says, hey, Mark, I've sent you 75 pictures. Have you gotten them? Guys, if you don't post pictures in this classroom, I don't get them. I'm not sure where those pictures got sent, but if you're not posting in class, then I'm not getting them, just so you know. And guys, I love being helpful. I really, really do, but I make myself available 15 hours a week in a live setting to give you feedback real time. Please don't make me look at 80 trades when I could be with family. I'll look at your plans, something like that. If you have a trade, cool. But don't circumvent posting in class. Work with me on that. So we had the 50-50 divergence prints. Here's where that plan comes in. Not coming from a good bottom. I have a divergence high, one-to-ones, and support that hasn't broken. I do have strong triggers. I did have divergence. We're just reading indicators at this point, guys. It's 11:20 on a Friday. We are darn near. Is Christmas next week? Next week is pre-Christmas week. Most of the people that do this for a living are probably at Macy's buying the ones they love something nice for Christmas. They've made their money this week. Ed, is this you? More NASDAQ fun. Doesn't make any sense at all to me, Ed. Not gonna lie. But I'm glad that it's working for you. I mean, I'm glad that it's working for you. So, Ed, you're my new Ron. For those of you that haven't been in class a lot, guys, Ron has a different trading plan. He has a trading plan that in the beginning didn't make any sense to me at all. And I was like, what are you doing? And then I started to notice that every one of Ron's trades looked exactly the same. Every one of his trades looked exactly the same. And then Ed starts posting these trades, and I'm like, Ed, you're giving me heartburn. What are you doing? And Ed starts talking about what he's doing. And I start recognizing patterns in everything he does. And 2 weeks later, I realize that all of Ed's trades look the same too. They're not high probability trend trades, but what they are is Ed taking what he's comfortable with and taking advantage. So just because your trade isn't a high probability trend trade doesn't mean that it's wrong. It just means that it's kind of next level. Gary, I love everything about it. Went down in flames. So when you take a loser, when you take a trade with odds favorable momentum, guys, there's a good lesson here. When you take a trade with no termination conditions, when you take a trade from the absolute best of the best area inside of favorable large triggers and it doesn't work, it's a cost of doing business. What you do next may be an indication of how much you trust your rules. Gary, you took a 50-50 with divergence, right? And I know that you'll take these. This is your thing. But Gary, because you lost this one that seemed perfect, you scrambled your way out of this one before it had an opportunity to really do anything. Trust your rules. If you don't believe in your rules enough to get stopped out, it may not be your trade. NG, 50-50, divergence prints, you get in. Lower divergence prints, you get out. Nicely done. If you're going to take it, if you're going to take a 50-50, that's how to do it. Ed, no worries, man. Send it to me. Just a little forewarning. I'm moving this weekend, so I may not get to it till Monday. We're leaving Dallas this weekend. We're heading down to Austin to spend Christmas with the kids, so I probably won't be in front of a computer at all this weekend. Gary says send it to me. $50-50 with divergence didn't work out, right? Thank you for that. There's that Friday fight. Buyers and sellers, buyers and sellers. What do you want to talk about, guys? You want to talk about anything can happen triggers? With flat triggers? $50/50s with divergence. Stake 30 for big boys. It is, isn't it, Ed? They're done. They've had their week. They're like, I've made my money. I've been a shark. I've done my swimming. Going home. Going home, relaxing. They're singing that old, what was that commercial? The Here's to Good Friends, Tonight is Kind of Special. It was a beer commercial. I don't know. I've got half of it in my head. Indecision. 50/50. No divergence, but your area of resistance inside of favorable large triggers is all the way up at 75. There's a mid band. NG time. You try the short, get out quick. And then you try the long, get out quick. And then you jump in, which I don't see from you a lot, and get out. Wanted to go long, but didn't because of second divergence. Also triggers opposing. But there's no area inside of favorable large triggers yet, right, NG? You're at a 50/50. And if you're going to use a 21, nothing about your 21 says go long. And your area is down here, but you've had two divergences on a 50/50 and a reversal bar just for grins. That's from yesterday. What would Mark's read be about this? There we go. If I'm reading left to right, I can't go short because I'm in determination conditions on the 21/3. If I choose to go long, I have to ignore the 21 and assume that it's going to go to the next area because everything was above these areas, large triggers up. So if I look at my 13/2, I've got a 50/50. I've got large triggers up, smalls are through, odds favorable, coming from a termination with a roll. I see two divergences, which means that probably best case scenario, this market's going to take out the pivot at 33 and maybe push down to that layered support around 32, maybe with a market flow signal based on the good bottom. Possibility, but certainly not looking for a long at the top of those triggers. I always trade pullbacks. How was that, NG? Did I read it like you read it? A little? Did it help a little bit? Do you see how this short was a horrible idea? That's right. Killer termination condition. Pull that one out of the mix. That's one loser that goes away, right? This one isn't from an area inside of favorable large triggers. Maybe it is on the 5-1. Pull back down to that termination condition. That might be a good one to get you to the termination condition. But then when it holds, get that one out of there. And then don't jump in because egads and little fishes, large triggers are still down. Everything's below this area and you jumped in because price got above it. Remember, when price reaches an area, where are your trigger lines? If they all remain below, you've lost that advantage of a clear path. There's a lot of good stuff going on here. Notice that you went short here against strong triggers. Guys, I think one of the best things you can do for yourself is break down what you see when you're not in the trade anymore, when you're not emotional. when you don't have that adrenaline. This is why taking pictures is huge. Because what happens is you can annotate a trade after, or annotate a chart right after a trade, and you're going to annotate it with everything that you thought you saw, that you got into a trade, and you're going to convince yourself that what you read was the right read. If you come back to that same picture in 30 minutes, you may have a different take on it. You ever looked at a trade you took and 20 minutes later you're like, why did I take that? What was I thinking? I've done it more than once. And it does. It gives that time of the fear of missing out to go away. Guys, that's why the spreadsheet is such a huge asset. If I go back to my trades, watch this. If I go back to my trades, and this is from, maybe it has a date on it. I don't know what day this was. But if I go back and I look at the trade and I analyze it with a clear thought, the note that I put on here was that 80 was 21.3 support. Should have just taken profits. I didn't because I was holding for the big move. Gave a lot of it back. I can go back and I'm not married to that trade anymore. Here I can come back and I can go, well, I'd lost momentum for the most part. Divergence prints, looks good, fits the rules. All right, I feel good about that one. There's nothing there that I didn't see. And you can come back and you can really have a clear head. Crude oil's going crazy, isn't it? Tried to break it, sellers pushed. Tried to break it, sellers pushed. They're trying again right into that pivot stop out. You're watching a fight as it happens. So Tyree, this is one of those. Do you have rules for 50-50 trades? That'll be my first question for you. How do you feel about 50-50 trades with divergence? Man, if I'm a tick away from my target, I'm hitting close. I like this. Coming from a good top, odds favorable, but it is a 50-50, right? No divergence makes me feel good about it. Strong triggers. I like it. Take a shot. When this divergence prints and this area still isn't broken, that's my exit. There's no way I'm losing on this trade. No way I'm giving money back on that one. I took a medium probability trade, and my first trouble spot are these 1-to-1s that have already held with all the trigger lines above. If anything, when I'm down here at 68.50, maybe my stop's right here at 71. Saying, all right, if that pivot stop out happens, I'm out. If it comes back above the 1-to-1s, I'm out. If divergence prints, I'm out. If I wouldn't take an entry because of divergence here, I'm not going to hold to there. Does that make sense? I know, right? Wouldn't that be great? You are. We're turning back time right now. We're going back and we're looking and we're like, okay. But the cool thing is, if you take a minute and watch this. No divergence on 50-50. Good entry. Medium probability. So then, this is the second half of my annotations. If this was my trade, it's not, it's yours. Yours may be different. Divergence prints on 50-50 means no entry on a short So I take my exit when divergence is true because term condition is still 50-50. Does that make sense? You don't think about it in the moment because all you're thinking about is making a whole bunch of money. So you come back and you take that picture and then you get it in screencast and you go to your management thing. And let's call this one if divergence prints during a 50-50 trade. So now I can look at it after the fact. Now I can look at it without the emotion or the adrenaline of being in the trade. And now tomorrow morning when I wake up, or Monday morning when I wake up and I'm ready to trade, I'm going to go, you know what? Let me go back to Friday's lesson. All right, if this happens, I like it. I like what's going on. I think I know what to do. And the cool thing is, that's a 50-50 trade. Trying to figure out where this one was. 50-50 with divergence. But I had a picture, maybe it was in my spreadsheet. Oh, absolutely. Thank you for posting. Chart reading things. Here we go. Same picture. 50-50. No divergence. Perfect entry. I love it. If I didn't exit here, it's still a 50-50, and now divergence is printed. I'm taking an exit on that trade. The thing that happens is we all want to have 20 years of experience in that first week because nobody likes to be new. Keep taking these pictures, guys. The more pictures you take, the quicker you get to where you want to be. This is my library. This, I think I updated 2 months ago. I'm at 2,200 pictures. I take pictures of everything. I don't put them all in screencast. Guys, these are the pictures that I've taken today. More pictures you take, the further along you get. Check it out, 50-50. Divergence prints, and that thing sinks right back to support. If you have a plan on 50-50s, you either took it and lost it, or you didn't take it because it didn't fit your rules. And you're thinking, man, I'm glad I have rules. A little bit of time left. Little bit of time left. What do you guys want to talk about? Screencast tells you every week to take many picks. You take too many picks. Ask a question, Ron. Will next week be light? I don't know, Gary. I don't have any idea. I'll tell you what, if we get to next week and patterns don't seem to be working, if something that typically wins 70% of the time is only winning 30, then I'm going to assume that the people that are accustomed to moving the markets maybe aren't moving it. Maybe they're on vacation. Ski season, right? People outside of Texas have that. It has the potential to be Gary, but there's no telling. 50-50, no divergence, make a little money. Divergence prints, no reason to lose money. All right. So Gary, if with the holidays you don't get enough trades to win your combine, are you going to fabricate them? Haven't started? Remember, that goes back to, are you going to focus on the process or are you going to focus on the money? Amen, Ron. I like to visit snow. I don't want to be anywhere where there is snow. 25% off? Guys, combines are a great thing, right? Combines are a great thing. You can get in and decide whether or not you're going to blow out your account for $150 instead of the $3,000 that blown account's going to produce. It's the same trading. Same rules, same everything. Can you follow it when the pressure's on? 2 inches of sleet, ½ inch of ice. I have a ½ inch of ice in my glass of water here, Ed. We're going to chase some weather. I'm excited to go to Florida. I'll be in Florida in a couple weeks. Just flurries. We moved to Texas in 1979 from Chicago. My dad still can't see the news without snowstorms in Chicago and say, that's why I don't effing live there anymore. He did not like the snow. And I'm going to teach from all over. I'm going to teach next week from Austin. When I'm in Florida, we may be on Christmas break. Typically, Nexgen takes 2 weeks, the last week of December and the first week of January, to give everyone a mental break for a couple weeks. That being said, we typically show up in chat rooms and we're still trading and doing stuff. But historically, the last 2 weeks of, like the last week of December, right around Christmas, and that first week of January are kind of get ready for the New Year's. So, I don't know. I may not be teaching from Florida, but when we get back, 62, brr. We're 41 in Dallas right now. I think Austin is similar. When we get done in Florida, we're driving to the West Coast, though. So I'll be teaching from hotels. I'll be teaching from Airbnbs. I'll be teaching from all over, and I promise you guys will not know the difference. Nobody knew when I switched from Austin to Dallas, unless you heard me say I just switched from Austin to Dallas. 17? Is that Utah, Elvis? Is that right? That's cold, guys. That's so Tennessee. Got people all over the place. It's pretty cool. I've got a buddy in Minnesota. Nothing but snow and 20 degrees up there. Just got hired on from a firm in Fort Worth. He's excited. Packing up the kids and getting the heck out of the snow. 1-to-1s, no triggers through. Does that qualify as rule number 2 not met? Feel like it might. Look at that fight. Ugh, and now they've cleared it. Now you have odds favorable momentum, and there's absolutely nothing in the way. Do you see it? Let them fight. Everything's ugly. If you entered here, you got stopped out. Now it's odds favorable. Take care, Ed. Now there's no termination conditions. And now there's a tiny window of opportunity right inside of favorable large triggers.
Order canceled.
Good job, Elvis. Someday. Someday. Absolutely, someday. Get a plan, stick to it, trade those advantages. All right, parting thought for the day, guys, because obviously everybody's done talking. NG, your chart needs rebuilding. All right, so NG, your homework this weekend is to start fresh. There's the instructions. Start fresh. And I know that it can be done first try because my wife pulled it off on hers. So you've got resistance. Respect it. Trade your charts. Right? Yours looks like mine, Michelle, or it looks like NG's? Cool. NG, you're an hour behind me, which means that you and I have a different midnight, which means that your fib accumulator is doing different things at different times than mine is, which means that your update is an hour behind mine. All of that can affect whether or not ours trade. I'm in Dallas. I'm just a couple hours above you, but my computer is on Eastern time frame because that's where Nexgen's server is. So I'm playing off that same midnight. Michelle, you know, the thing that I do is when they're different. Oh, look at that. I'm 30 days back. Remember when I broke my 13.2 earlier? Let's see what happens when I move mine to 10 days back. No, mine are the same. So I'm typically 10 days back. I have an Eastern time frame. I did completely rebuild my charts and reset my database 2 days ago, I think, 3 days ago. So if we're not lining up, just rebuild. It's good practice. It's definitely good practice. Thank you, Ron. It's going to be a good one. I'll see you guys next week. And we're going to get Nexgen Jen in the room every day for the next month. Her last day of this contract is today. So I have to be on my best behavior for almost 30 days. That's going to be tough. Wish me luck, guys. That's it. Let's call it 10 minutes early today. I feel good about it. Guys, it's been a great week. Your participation has been unbelievable. The pictures we're getting, the questions you're asking have really, really been solid. And I feel like if you keep this moving forward, if you keep asking these questions, you're going to get to where you want to be. I believe that wholeheartedly. If you need anything, my email works. Make sure that you reach out. Otherwise, I'll see you guys Monday morning, and we're just going to start the process all over again. We're going to look at Gary's real quick before I go. Gary, termination condition, and you go short. Get out at the termination condition. It bounces. That termination condition becomes almost a 50-50 with divergence. You get in and it goes down. Flirting with those one-to-ones, Gary. You're making a calculated decision to trade into an area likely to stop the market. And it worked out for you this time. How often does trading into termination conditions work? And Gary, can I say one thing about it? And this is just me. Because I know that you're getting ready to do your thing. With this much momentum, the potential of a retest is pretty good. With absolutely no momentum, you're just trading hope. You hope that thing goes through there. Does that make sense? If you're gonna take this trade, man, give yourself, see, look at this, tons of momentum, right? Retest the area. You see this a lot. Without that momentum, things get tough. Becomes harder and harder. I love momentum. There used to be, as everybody used to always say, strong triggers break things. It's true. But it didn't have strong triggers, Gary. You had anything can happen triggers that hadn't broken through one-to-ones, right? If the 13-2 leads the way, is that your best look for a short? Questions you have to ask yourself. Did you get lucky? Or was it calculated? It may have been calculated. You may have said with odds favorable over here and this resistance holding. Maybe. But guys, sometimes I like to point out, I like you to be aware of where things could have gotten wrong. All right, y'all. Go enjoy your weekend. Have fun. Do your Christmas shopping, your Hanukkah giving, your Kwanzaa celebrating. Whatever you do, do it with a smile.